What is the breakout trade that none of you are actually taking, or at least most people aren't taking, and how can you add it to your repertoire? That's what I want to talk about today. We're going to get the real deal on, and let's just get started with it. Breakouts, you could talk breakouts every single day for a month when in trading because everybody's looking at them. It's all about that explosive upside when you've been collecting at a level and sellers on top of sellers, and they can finally take out that top. Uber is an example. I'll give you a standard breakout here. I was in it. Now I'm in a dip buy. It had 65 top yesterday. It had a pre-market top of 65. It tested again. Everybody knows this. You take the long when it breaks. Look for the big continuation. You got an upward trend in this stock in a general sense as well. So everything about this breakout is about as standard as it's going to get. Like, what do you not like about that? It's taking out a high. It's taking out a resistance level. It's significant. It's got the upward trend. You probably have a bunch of stops. It's an even dollar number, 65, 5s and 10s, evens. Everybody likes that kind of a trade. The thing about the easy trade is it can tend to be a little bit crowded. So sometimes you want to apply those same principles, and the principles that we're talking about here are something which is consolidating into a top, like it's building pressure into a level where there will be a lot of stop orders. Stop orders for anybody short, they might be covering at that level. So you want to have pressure into a level, you want to have stop orders. Ideally, you want to have an overall general trend in that direction. So even better, if you're looking long, you want an overall general trend to the upside. So all of those things are obvious when you're taking out the high of the day, but how could you possibly have that kind of a trade off of lows? Could you have that off of lows or under VWAP? Yes, you actually can. And I had one of those today, thankfully, so we're able to get this. And I love the fact that, look, we can always point at charts and show you a setup, but ultimately I'd much rather be able to show you an actual trade where you can get something like a consolidation breakout trade that's probably one that is not in your toolbox for a lot of traders. So here's Funware, as you can see, got absolutely squashed this morning. There's nothing bullish about that. However, you've got a couple of things working for it. Wipeout bottom. You've got higher lows into the same resistance level. The other thing that you've got going along with it, and I'll just pop to this nice little 15-minute chart, is it's had a history of doing this. So in what is a gentle upward trend, it had a big move, and since they dropped an offering, what has it done? Higher lows, and even with this little Hwadunk action, it still has a chance to hold on to the support level. So you're in a very gentle upward trend in a stock with some buy pressure, and then you're looking for a consolidation breakout. It's all about the risk to reward here. So given the fact that it's at the low of the day, or at its local bottom, the low of the day is at 16 cents, but really this is a breakout off of this 20-cent level. So what are you looking for when you get that kind of a trade? First, it has to make a defined bottom. That's the most obvious thing for anybody to say. Like, I need to see a rejection of a level on volume. Did it do it? Absolutely. Not once, but twice. It did a huge volume bottom right there in the pre-market, and then just for good measure, after making a higher low and giving you this 22-cent level of rejection, at the open, it then makes another big dip on volume at 9:30 on the open that goes into a higher low. Well, that's kind of gorgeous. So you get 15, 16 cents here. The market opens up. It wicks the 18 level, immediately recovers to this price, which is going to matter in a second. That's 20 cents. Right back into 20 cents. There's your consolidation. It tries to dip again. What does it do? It makes another higher low. So I get it. This looks nasty. Very, very nasty. But what has happened since then? Recovered, and at the open, wick bottom, hold, higher low, consolidation. You've now had two higher lows off of the open. Off a stock, which I showed you on the 15-minute, has been holding the same bottom since it got crushed. So it's got a very defined low that it's working off of. So any consolidation break on there, I'm going to give it that chance. It's a pretty simple setup. I think you can take it two ways. I elected to use the 20-cent level in here by taking the 20-cent break and giving it to that local bottom. You could have easily also taken this at about 19.5 or maybe even 19 even as it's consolidating there, and you're giving it to that low. I prefer 20 cents to see it actually bust through some of that resistance. But it's all about identifying that tight wind up where stock is just compressing and compressing, and then it gives you a sense of a breakout. The other good portion of this trade is if you're thinking about the other side of your trading, which I think you should always think about the other side of your trade, who's your counterparty in this situation? Maybe some shorts covering? Like, what did we show? There's probably shorts up here that have been like, oh, look at that, they dropped an offering. I so happen to be shorting the stock on that move up. They drop an offering. I'm not getting out just yet. I'm still deep in the money. There's shorts looking for reasons to cover. One time makes a bottom. Second time makes a higher low. At that point, it gaps up. You might be thinking I should be covering when it continues to hold the 15-cent level. Like if it found a bid, it immediately found a bid at 15 cents after the offering, well, then maybe that is a defined bottom. There are shorts there, maybe even there that have to be thinking about what happens when it holds that same low at 15. Where is my out? If I was trailing a short, I'd be thinking about things like 22. When it failed this 20 at the open the second time, I'm like, okay, either it gets to the low and presses to 15, or I should take the profit in at that 20 level. That's your confluence. You've got higher lows for a short-term trend. You've got a defined support at that 15-cent level. You've also got plenty of shorts that are in the money in the short term in the last 3 days on the stock to give you a press to the upside. All you need is for it to go 2 to 5 cents. You're risking 1, right? So in this particular case, it's about 5% worth of risk, and you can be taking 10 to 20% gains, and that's just going into the two most obvious levels. It shows you there's 10%, and it shows you the next level up, 24 to 25. That's your 20%. It doesn't have to be rocket science. I think sometimes you want to try to make trading as simple as possible. I am a firm believer in keep it simple, stupid. And this is that example right here. Now, obviously, breaking out the high of the day matters. I get it. Everyone wants to have breakout trades where you can see that defined top and the relief of pressure. NVIDIA 500 is a perfect example of that. But if you can find trades where it gives you the consolidation breakout off of lows, sometimes it's the path of least resistance which can be the most effective for you. So in this particular case, happen to have an example of it here with Funware. Remember, you want a defined bottom. You want at least one higher low if you can. You want there to be some shorts reasonably covering on the other side of it, a defined breakout price, some targets in there for you as well. Doesn't hurt when it has a crap ton of volume like Funware did here today. So it's the breakout that I don't think a lot of people are taking, a consolidation break off a stock near its bottoms. There's one for your toolbox. Hopefully you can use it to your advantage, and we'll send it right on back. But that's that real deal.